Welcome to the deep dive. Today, we are taking on a story that is just so audacious, so layered with deception. It honestly makes most Wall Street thrillers look pretty tame.
hmm
We are diving into the alleged $4 billion fraud known as OneCoin.
And our mission for you here is to really peel back the layers of that illusion. We're not just, looking at the headline number, which is staggering $4 billion.
It's unbelievable.
It is. But we're going to use the actual legal documents. Our source material today is mainly the 2019 class action complaint from the Southern District of New York, plus all the federal indictments and FBI info that came with it.
So we can see exactly how it was built.
Exactly how it was structured, promoted, and ultimately executed by the people at the very top.
Okay, so let's start there. That scale, $4 billion, just successfully pulled from thousands, probably hundreds of thousands of investors all over the world. And it was sold as this revolutionary cryptocurrency. They called it the Bitcoin killer. But the reality, according to the U.S. attorney who oversaw the indictments, Jeffrey Berman, was a lot more simple and a lot more sinister.
Well, that's the thing. Berman called it, and this is a great quote, a pyramid scheme based on smoke and mirrors more than zeros and ones.
Smoke and mirrors.
And that's the core paradox, right? The difference between this glamorous, super high-tech image they projected and the empty scam underneath.
Yeah.
They just took all the complicated, cutting-edge language of crypto and used it as camouflage.
So they didn't invent a new crime.
Not at all. They just found a really, really effective new costume for a very old one.
And nothing shows that intent, that fraudulent intent, quite like the words of the architect herself. We're talking, of course, about Ruja Ignatova.
The Cryptoqueen.
The Cryptoqueen, sometimes even called Her Royal Highness. And we have this incredible internal quote that just lays the whole plan bare, right from the very beginning.
This is the real aha moment. It removes any doubt about what they were trying to do. This is Ruja writing to her co-founders, Sebastian Greenwood, really early on. She's acknowledging let's say, the gray area they were operating in.
Okay, what did she say?
She wrote, "It might not be something really clean, but I am especially good in this very borderline cases where the things become gray and you as the magic sales machine and me as someone who really can work with numbers, legal, and back you up in a good and professional way, we could really make it big, like MLM meets Bitch of Wall Street."
Wow. MLM meets Bitch of Wall Street.
Yeah.
That's an extraordinary line. It just sets the tone for everything. This was never about tech innovation. It was explicitly about sales manipulation and exploiting those borderline cases where the law hadn't caught up yet.
It's an admission, plain and simple. Their success was going to rely on aggressive marketing, that's Greenwood, the magic sales machine, and her sophisticated legal and financial maneuvering. This was an organized criminal conspiracy from day one, just dressed up to look like a financial revolution.
So over the next 30 minutes or so, we're going to break down all the pieces of that illusion. The fake mining process, the multi-level marketing structure that forced people to reinvest.
The high-level money laundering, which is a whole story in itself, and then the international manhunt that landed some key players in court, and of course the Cryptoqueen on the FBI's 10 most wanted list.
Let's start with that illusion, the technology they claim to have. For anyone listening who isn't, super deep into crypto, we should probably set a baseline. What is legitimate crypto tech supposed to look like?
That's essential.
Yeah.
Because you need that baseline to see just how far OneCoin strayed. So when we talk about real virtual currencies, Bitcoin, Ethereum, things like that, we're talking about blockchain technology.
The blockchain.
Right. And you can think of it as a digitized, decentralized public ledger. It's like a record book that isn't kept by one bank. It's distributed across thousands of computers all over the world.
And that public part is the critical piece.
It's non-negotiable. That's what gives it security and immutability. Each block in the chain has transaction records, and once it's verified, it's locked in. It can't be changed. You can't double spend. And most importantly, anyone can look at it. Anyone can audit it.
That decentralization is key.
Absolutely. And this was all happening during the big boom of ICOs, initial coin offerings, which is exactly what OneCoin was trying to look like.
Right.
An ICO is basically a fundraiser. A company issues a unique token, usually on an existing auditable blockchain, and that token can represent, shares or profits or some kind of service. And crucially, they're tradable on real exchanges. OneCoin just copied all the words.
So OneCoin itself gets founded around April 2014. It's based in Sofia, Bulgaria, but it operates under this whole web of different company names.
Yeah, you had One Payments, One Network Services, One Academy, One Life. It gave this impression of a big, legitimate, diversified financial company.
And they registered the parent company in places like Dubai and Belize.
Right, which is a classic move. You set up where the regulations are a bit looser. It's called regulatory arbitrage. But their strategy was actually brilliant in its deception. They didn't sell a cryptocurrency.
They sold educational packages.
Exactly. The crypto tokens were just a reward for buying the education.
And why was that distinction so important for them from a legal standpoint?
It was all about evasion. By selling educational materials, they could argue they were selling a product, not an investment contract.
So they could try to sidestep securities regulators like the SEC?
Precisely. The tokens were just a bonus for joining the network and getting smarter, not the actual investment itself. Or so they claimed.
But the reality of this education was, well, the complaints say it was a total sham.
It was. The product line was all these trader packages, designed to get as much money as possible. You had the starter package for about 110 euros, which is low enough to get people in the door.
And then it just goes up from there.
All the way up to the tycoon trader, the premium trader, and then finally the ultimate trader package.
How much was that?
118,100 euros.
Wow.
Yeah.
And I'm guessing the justification for that price was the amount of education you got and the number of tokens.
That's exactly right. But when investigators actually looked at the content,
What'd they find?
it was almost all just copied and pasted. From Wikipedia, from other free websites, you were paying over 100 grand for information you could Google for free.
So that proves the education was just a cover story. The real product, the only reason people were paying, was for the tokens and the coin.
Without a doubt. Which brings us to the core of the tech deception, the mining process.
This is the real linchpin, isn't it?
It is. They told a very, very convincing story. See, you didn't buy OneCoins directly. You bought packages that gave you tokens. Then you were told to submit these tokens for mining in these secure mining pools.
Which they claimed were where exactly?
On servers in Bulgaria and Hong Kong, protected by powerful computer hardware.
And they used all the right language. They talked about scarcity, right? That mining difficulty would increase over time, just like with Bitcoin.
Oh yeah, it was perfect mimicry. They had charts showing the coin price and the mining difficulty going up together. It was all designed to build confidence that this was a legitimate, scarce asset that was only going to become more valuable. It looked and sounded just like the real thing.
But again, the internal documents just blow the whole thing up. This is where the illusion completely dissolves. Tell us about that damning email between Ruja and Sebastian Greenwood.
So Greenwood starts the conversation, and he clearly gets how important this technical story is. He writes, "The concept of converting tokens into OneCoin is an important phase for validity and truth behind the OneCoin, a story we can sell to the members."
So he's admitting it's a story we can sell.
He knows the facade is everything, and then Ruja replies. And her reply is just devastatingly clear. She cuts right through all the marketing nonsense.
With just a few words.
4 short words, she wrote, "We are not mining, actually, but telling people shit."
There it is.
That's the whole fraud charge right there in that admission. The legal filings confirm it. No mining farms, no specialized hardware, no mining ever happened. There was no decentralized public ledger. The one thing you absolutely have to have for a real cryptocurrency.
So what was really happening? If there was no mining, how were coins being created?
The FBI confirmed it was incredibly low-tech and completely centralized. Instead of a complex, secure blockchain, they were just using a basic computer SQL script.
A SQL script, like a database.
Exactly, a structured query language script. It's just an internal database entry.
Yeah.
Now, Ruja or her IT guys could just create billions of coins whenever they wanted, instantly.
With no checks, no balances, no public record.
Total untraceable control. They could assign them any value they wanted and just drop them into investor accounts. It had no transaction history outside their own private ledger. It was, as one FBI director put it, a cryptocurrency existing only in the minds of its creators.
So it lacked any real value because it lacked the scarcity and decentralization that defines the whole asset class.
Right. Which brings us to how they scaled this lie. And that relied entirely on their sales engine.
The pyramid engine.
If the technology was a mirage, the engine that drove $4 billion in revenue had to be incredibly powerful. And it was. It was the multi-level marketing system, the MLM structure.
This was the lifeblood of the whole thing. How was it designed to create that kind of exponential growth?
It was all about viral spread and aggressive extraction. Members got commissions, usually 10 to 25%, for recruiting other people to buy these expensive packages. And it paid commissions several levels deep, so you're incentivized not just to recruit, but to get your recruits to recruit. a classic pyramid structure.
But the truly insidious part, the thing that really held the whole fraud together, was the mandatory reinvestment.
Yes, this was the financial lock-in. It was genius in a criminal way. You see, only 60% of the commissions you earned could be withdrawn as cash.
Only 60%. What happened to the other 40?
That remaining 40% was automatically put into a trading account, and you had to use it to buy more OneCoins or more tokens for future mining.
So you're forcing your most successful promoters, the people bringing in the most money, to become forced buyers of your worthless asset.
Exactly. It accomplished two critical things. First, it made demand for the coin look perpetually high because your top earners were constantly buying it. And second, it kept money locked inside the OneCoin ecosystem. It delayed the bank run that eventually kills every Ponzi scheme.
They were creating their own internal economy that didn't need any outside buyers.
They were. And that artificial demand led to absolutely explosive growth numbers.
What are we talking?
Between late 2014 and the third quarter of 2016, less than 2 years, the company generated over 3.3 billion euros in sales revenue. They claimed over 2.2 billion in profits and boasted about having 3 million members.
All fueled by that viral mandatory reinvestment engine.
The whole time, they had to keep up the illusion of value. So publicly, Ruja was always saying the coin's price was based on pure supply and demand, just like Bitcoin.
Hammering that point home.
Constantly. In mid-2016, she said, cryptocurrency is not backed up. It is an asset where demand and supply drive the price. They wanted investors to believe their huge user base was driving genuine demand.
But once again, the internal documents tell a completely different story.
A breathtakingly different story. Ruja's internal goals for 2015 explicitly defined this strategy as manipulation.
What was the goal?
I'm quoting here. Trading coin, stable exchange, always close on a high price end-of-day open day with high price, build confidence, better manipulation so they investors are happy.
Better manipulation.
She even spelled out how. We can manipulate the exchange by simulating some volatility and intraday pricing.
So the goal wasn't organic growth. It was just to make sure the price always went up so investors would feel happy and keep recruiting.
That's the difference between a risky investment and outright fraud. They were guaranteeing the outcome. And the price grew exponentially, from 50 euro cents to almost 30 euros per coin by 2019. An entirely fabricated growth curve.
To make this fabricated value seem real, they had to create platforms that suggested it had some real-world use, some way to cash out.
Right. The first attempt was a platform called Xcoins. It was promoted as an exchange where you could trade your coins for assets or, eventually, cash.
The all-important exit ramp.
Which is what every investor is looking for. But they just abandoned it. In 2017, XCoinX was gone. The main exit route just vanished.
Then they launched DealShaker. This was supposed to be a merchant platform, right?
Right.
Proof that businesses would accept OneCoin.
That was the idea. Initially, they claimed merchants would accept OneCoin for payment. But as the scheme went on, and they got more desperate for real cash,
the terms changed.
They changed dramatically. By late 2018, DealShaker merchants were allowed to accept as little as 10% of the payment in OneCoin. The other 90% had to be in fiat currency.
So it wasn't a platform to circulate the coin at all. It was just another way for OneCoin to get its hands on real cash from its own members.
Exactly. It just proved again that the entire structure was designed to harvest cash, not operate a currency.
When you lay it all out like that, the fake tech, the mandatory reinvestment, the price manipulation, it's so clear why the authorities called it a Ponzi scheme.
Yeah, a century-old Ponzi scheme just wrapped in confusing new crypto jargon.
So let's really dig into that legal classification. What were the specific signs that made the U.S. Attorney's Office say, this isn't a failed startup, this is fraud?
Well, the evidence was just overwhelming. First, the returns that existing investors were seeing. They weren't being generated by any legitimate business activity. They were just being paid with new investor money.
Classic Ponzi.
The definition of it. There was no real income-generating product. Second, all that new money was going straight to the top to pay huge salaries, commissions, and fund the lavish lifestyles of Ruja, her brother Konstantin, and Greenwood.
And the structure itself was just predatory by design.
Totally.
Yeah.
It promised these insane returns on an asset that had no income other than new recruits. The value of the coin was just made up. It was whatever the principals decided it should be that day. And the MLM structure was the only thing driving expansion.
Beyond the Ponzi label, the case in the U.S. really hinges on the charge of selling unregistered securities. This brings us to something called the Howey test.
Right. The Howey test is a framework from a Supreme Court case that sets out 3 criteria to decide if something is an investment contract, which means it's a security and has to be registered with the SEC.
Okay, so let's walk through those 3 prongs. How did OneCoin's trader packages meet the test? What's the first one?
The first one is simple, an investment of money. And people were definitely investing money, euros, dollars, other cryptos to buy these packages. So check.
Okay, easy enough. What's the second prong?
The second is that the investment has to be in a common enterprise. This just means everyone's money was pooled together under the control of OneCoin Ltd. The success or failure of any one investor was tied to the success or failure of the whole company.
So everyone was in the same boat, controlled by Ruja's company.
Exactly. Their fates were intertwined. So check.
And the third prong, which seems like the most critical one here.
It is. The expectation of profits must come solely from the efforts of others. For OneCoin, this was undeniable. Investors were totally passive. They were told they were buying into this mining process. Their profits depended entirely on the defendants, on Ruja and her team, to run the fake mining, manage the company, and manipulate the price upwards.
They had zero control.
None whatsoever. So the court found that the trader packages were, in fact, investment contracts. They were securities.
And since they never filed a registration with the SEC,
They were strictly liable for selling unregistered securities. The legal framework just stripped away all the crypto jargon and revealed the simple fraud underneath.
and this wasn't just a U.S. problem, the whole world was starting to notice.
Now, the global regulatory response was, for regulators, pretty fast. By late 2017, authorities in at least a dozen countries, China, the UK, Germany, Canada, India, had either banned the operation or issued public fraud warnings.
China was particularly aggressive, weren't they?
They were. They froze funds and went after local promoters very early on. They recognized the pyramid structure for what it was.
And amidst these huge numbers, these billions of dollars, we can't forget the individual victims. The complaint names a plaintiff, Christine Grabless.
Yeah, her story is representative of so many. She invested about $103,500 between 2015 and 2016. Her total out-of-pocket loss was around $130,000.
And she was just relying on what the company and its promoters were telling her.
Completely. She relied on the public representations that the coin was real, that the mining was real, that the value was real, and as the internal documents prove, every single one of those core representations was a lie.
So let's talk about the people behind those lies. Starting with the face of the whole operation, the woman who created the spectacle, Ruja Ignatova, the Cryptoqueen.
Ruja was everything. The founder, the face, the marketing genius, the sales driver. She wasn't just some CEO in an office. She was a global phenomenon within her network. She organized these incredibly lavish international events.
We're talking Dubai, Macau, London.
Exactly, all designed to project this image of unbelievable wealth and guaranteed success. There's a story that she hired Tom Jones to perform at her birthday party in London.
Seriously, Tom Jones.
That's the report. It was all about sending a message. The money is real, and if you invest with us, you can be part of this exclusive club.
But that glamorous facade all came to a very abrupt end. Her disappearance in late 2017 is the stuff of legend now.
It is. Her last known public movement was a commercial flight from Sofia, Bulgaria to Athens, Greece in October 2017. And then, poof, she was gone.
And the legal filings basically say she fled to avoid getting caught.
That's a strongly imply it. Law enforcement was closing in, and she vanished.
Her current status is just, it's like something out of a movie.
She's on the FBI's 10 most wanted fugitives list, which is incredibly rare for a white-collar criminal. She's charged with everything: wire fraud, securities fraud, money laundering, and the FBI thinks she's a very sophisticated fugitive.
What do they mean by that?
They believe she travels with armed guards, may have had plastic surgery to change her appearance, and uses a German passport to move between places like the UAE, Bulgaria, Russia, Greece. The reward for information leading to her arrest is $5 million.
$5 million. So with the Cryptoqueen gone, the scheme couldn't just stop. It was too big. It needed a new face. Which brings us to her younger brother, Konstantin Ignatov.
Right. Konstantin was originally just her personal assistant, maybe a bodyguard. But when Ruja disappeared, he was thrust into the spotlight. By mid-2018, he was basically running the show.
He became her proxy.
Exactly. He was flying around the world, appearing at One Life events, trying to reassure all the promoters and investors that everything was fine, keep the money flowing.
And he kept repeating the same lies about the coin's value and the big promise of an ITO that was always just around the corner.
A classic Ponzi tactic to keep people from panicking. And this all leads up to that dramatic incident in Las Vegas, right before he gets arrested.
He flew to the U.S. for a big OneCoin event.
He did. March 2019, he was there to meet with the top 20 or so leaders from the U.S. market. And documents they found on his phone show he was told specifically, do not need mention Dr. Ruja. They were trying to erase her from the story.
And at that meeting, he basically told anyone who wanted to cash out to get lost.
It's the sound of pure desperation. A Facebook post from someone at the meeting quoted him saying, if you are here to cash out, leave this room now, because you don't understand what this project is about.
Unbelievable. He's blaming the victims for wanting their money back.
It's pure psychological manipulation. True believers don't ask for their money. Only the weak and disloyal do.
But that defiance didn't last very long.
Not at all. He was arrested on March 6, 2019 at Los Angeles International Airport as he was trying to fly home from that Vegas event.
And the third key player, the co-founder, Sebastian Greenwood.
Greenwood was the magic sales machine, the architect of the MLM system. He had experience with a predecessor scheme called Bitcoin. He was a master recruiter, and he was the one who got that infamous email from Ruja about telling people shit.
And his status.
He was arrested in Thailand in 2018 and extradited to the U.S. He's awaiting trial in New York, just like Konstantin. Those three, Ruja, Konstantin, and Greenwood, they were the core.
But with billions of euros coming in, they had another huge problem. How to clean all that money.
Right. The laundering problem. And to solve it, you need to bring in the professionals.
Which is where Mark Scott comes in. An attorney. A partner at an international law firm, Locklord. That detail is just staggering.
It is. It shows the level of sophistication. Scott allegedly used his legal expertise to set up this complex web of foreign hedge funds, specifically to funnel OneCoin's illicit revenue.
How much money are we talking about?
The indictment says he helped Ruja and others launder over $400 million through accounts in places like the Cayman Islands and the Republic of Ireland.
The classic spots for this kind of thing.
They offer layers of privacy and complexity that make it really hard to trace where the money is coming from and who actually owns it. Scott was using the infrastructure of the legitimate financial world to mask criminal activity.
And he set up specific shell companies to do this. The source documents even say some of them had his initials, MSS, in the company names.
Yeah, entities like MSS International Consultants. This is the crucial step. You take the dirty electronic money and you turn it into hard, clean asset.
And they did that right here in the U.S.
They did. The complaint details two specific purchases. One shell company bought a $2.85 million mansion in Massachusetts, where Scott lived. Another one bought a $3.7 million mansion in Hyannisport, Massachusetts.
So money that investors thought was building the future of finance was actually just buying multi-million-dollar mansions in New England for the lawyer cleaning the cash.
That's what the indictment alleges. It shows the objective was always just personal enrichment. And Scott's involvement wasn't small. He was allegedly using his position at a respected law firm to actively conceal the criminal origin of hundreds of millions of dollars.
What's his status now?
He was arrested back in September 2018. He's currently under supervised house arrest, awaiting trial on money laundering charges.
It just reinforces the point that this was a full-blown conspiracy. You had the executives creating the fake product, the MLM bringing in the victims, and then professionals like Scott cleaning the profit.
The complaint says each defendant was aware of what was going on. They knew the representations were false, and the goal was just to enrich themselves.
So this deep dive really shows us in incredible detail how a $4 billion mirage was built and sustained for years. It wasn't a failure of tech. It was a failure of basic financial integrity.
And the key takeaway, the absolute core of the lie, was the technology, or the lack of it.
Right.
OneCoin never had a legitimate, auditable, decentralized blockchain. The second you realize that, the moment you find out they were just making coins with a simple SQL script, the whole thing collapses. The whole valuation is a fantasy.
And that brings us back to you, the listener. This case is it's a masterclass in why due diligence matters. The victims were lured by the hype, the glamour, the promise of an IPO. They failed to ask the one simple technical question that would have unraveled everything.
Where's the public decentralized ledger?
That's the question.
It's the firewall. And this case shows that regulators are often slow to catch up. OneCoin exploited that gap perfectly. The fact that Ruja is still out there and that a professional like Mark Scott was allegedly willing to help shows that these aren't lone wolf crimes. They require a network of enablers.
So what's the final lesson here? What does this $4 billion mirage tell us about how we should look at new investments, especially when they're wrapped in all this complicated jargon?
The structure of the scheme was the crime. The technology was just the camouflage. So the provocative thought we want to leave you with is this. When you see cutting-edge tech like blockchain being used as a veneer, how do you train yourself to look past the jargon, past the words like token and mining, and focus only on the financial function and the verifiable proof of an asset?
Because if you can't verify it,
So you can't see that public decentralized proof for yourself, then the asset is just an internal accounting entry. It's controlled by one party, and it's just waiting to be zeroed out. That's the cold, hard story of the $4 billion mirage.
a profound lesson. Separate the hype from the hard evidence. That's it for this deep dive.